Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at euro currency. So in recent session we do not have a lot of changes, so for you probably it's also seems obvious the picture, so maybe not really big necessity to make some comments. So currently on the daily chart you could see that market is forming some consolidation, so it's just plot as a flag. Pattern trend remains bullish, which suggests that market could keep going higher here. The major question is about the distance. So whether it will be just wash and rinse of the previous top, and then market will collapse down, start forming our hand shoulders here, or it could show the straightforward upward continuation to the 110 area. And in this case, we start watching for this pattern. On the fall time frame chart, obviously picture looks bullish. So here we have the triangle consolidation, which is more pennant, as you like it more, and that stands in favor of possible completion, final completion and touching of the XOP target at least. From that standpoint, in the shorter term, on the intraday charts, first is probably we should stay aside from taking any short position by far. Second, as we already mentioned, so we could consider possible the butterfly pattern. It's 109.10. It's the nearest destination point is 127 extension of this pattern. So that's what about the short term. In the longer term, situation stands a bit not as clear, just because I would like to show you the one pattern that you can't see on the euro currency, but you could see it on the dollar index. This is a weekly chart, and you can see that here we have the bullish grabber on the dollar index. It's just taken out of this top. It means that euro currency could reverse and retest the previous lows that we've got. This, of course, if this is not some kind of the byproduct of the Friday close. So, but currently this pattern is still valid. Another interesting pattern, or at least situation, I would like to show you on the 10-year bonds. On the United States, it's also on the weekly chart, so everything interesting right now stands on the weekly. Let's take a look what we have. Yes, we have some contraction and drop in the yields to the 4.3 point level. We have explained in the weekly report why this has happened, just because of the distribution by the Janet Yellen assets that have been accumulated from the tax period, and also she used approximately 100 billions from its piggy bank on a TGA account in the Federal Reserve. So actually, it results that everything that has been received on the tax in taxes on first quarter already has been spent on actually by the paying of the coupons on the bonds and some other expenses. And here, take a look what's happening. Despite that we have this breakout of the channel, market coming close to the MACD predictor, start flirting with it this week, probably next week as well. And if we'll get the grabber, it also suggests rising of the yields. So as you could see, this stands in agreement with the idea that we have on the dollar index. So we have warned by the end of the last week that current bullish sentiment is mostly temporal and not and a bit fragile, not really reliable, because inflation will not disappear. It just will be shown by some other way in some other indicators. Since we know that the CPI now is totally controlled by the Bureau of Statistics, it is adjusted, but inflation stands here and it will find the way in the quotes as a dollar index, as in 10-year bonds or any bonds. So we just have to keep in mind and control the weekly charts as on dollar index, as on a bond market. That's for a bit longer perspective, but for now, for today's session, I think that we could just watch what will happen with this butterfly once the 109 will be completed. It will be important level just because it will have the direct relation to the grabber that we have on the dollar index, because it has to start working. It means that if it starts working, your currency will take it out of this loss. So it means that hand shoulders potentially might be formed, but following the logic of the grabber on the dollar index, these hand shoulders should fail. And what will happen around the XLP target here, this will be very important, because actually butterfly that will be formed, this might become the starting of the reversal. So that's the point that we intend to control in the nearest couple of sessions.